What's up traders, it's Nick here and welcome to another breakdown. As usual, I will be keeping it as educational as possible and also practical. So without further ado, let the intro roll and I will see you on the charts. Okay, so it's definitely time to speak about silver, a very interesting market, which is quite near to providing to us a good trading opportunity. So I want to give you guys a full educational breakdown of the situation that we currently have to show you where we can be looking for the next potential opportunity. So first, we will be covering the technical aspect of this market. We will then go and see what we have from an order flow perspective by checking the commitment of traders for silver, which is basically what hedge funds, so the non-commercials in the market, which are the big players in the market, are doing on silver, and obviously by being able to follow their orders and also looking at the technical breakdown of this market, we will be able to understand where we have the highest probability situation for a potential opportunity in this market. Now, starting here from the monthly time frame, what do we have? Now, here in the monthly, we can see how the market has just completed this W formation to the downside. Now, generally speaking, after the creation of a W, what you expect is for the market to complete the pattern at the previous resistance, turn support, which is the neckline of the pattern itself, before the potential continuation to the upside. So here in the monthly time frame, we definitely expected this market to first provide a move to the downside, complete the pattern, and then we do expect the market to potentially provide the continuation to the upside. So basically at the moment we're testing exactly the previous resistance, which is now turned support, from which we can expect a potential move to the upside. Now, generally speaking, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And if we take our Fibonacci from the low to the high of this impulse, what we can see is that the market has just retraced exactly in the zone that is in between the 0.618 and 0.786 of the Fibonacci taken on the monthly impulse, which is a very strong confluence of support zone from which we do expect the market to potentially provide a continuation to the upside. Going down on the weekly time frame, what do we have? Now here on the weekly, we can see that at the moment the market has just tested a very strong weekly support zone. In fact, from here the market started all this move to the upside, and we can see how at the moment we have just tested once again the exact same support area from which there is definitely the possibility to see this market provide a rejection to the upside. So here on the weekly, everything seems quite bullish and we do expect the market to provide a move to the upside. We can also notice one quite important thing. If we go down on a line chart, what we can see is that we have a very strong area of previous support at this zone, which is now again support here, because if we zoom in, we can see how last week the weekly candle that we were trading in actually closed bullish above the previous weekly close, meaning that at the moment this previous support, which was supposed to be term resistance, is now again acting as support since the market has broken and closed back above it. So also here in the weekly, there is definitely the possibility to see the market provide a move to the upside to complete this potential inverted head and shoulders and provide a continuation to the upside. If you have any questions or requests for the next videos, make sure that you leave them down in the comment section below. Also, make sure that you smash that like button and subscribe. Going down on the daily time frame, what do we have? Now here on the daily, I had spoken about silver few days ago. In fact, when the market was at this area, I made a full breakdown explaining all the reasons for which, from this zone, we expected the market to provide this move to the upside. And in fact, that is exactly what the market did. And by the way, I will link this previous analysis in the description, so you can go and check it out for further reference and more free education. We can also notice that all this horizontal structure here is extremely strong support. In fact, from here, the market started all this move to the upside. Again, here the market started this move to the upside. The market broke the support to the downside. At that point, previous support was turned resistance. The market tested and rejected its zone to the downside. Went again for a test here. At that point, obviously, the zone acted as resistance. The market then broke back above. And since in the market, previous resistance, once it is broken to the upside, is turned support, at the moment we're testing strong support, and there is definitely the possibility to see the market provide a rejection to the upside. Now, if we go and see what we have from a COT perspective, so commitment of traders perspective, which is what hedge funds are currently doing in the market, what we can see is that with the last report, hedge funds have opened 743 long positions and closed 2.6k short positions here on silver. So silver at the moment is starting to get finally quite bullish again, with net positions increased from 28.9k to 32.3k, reaching 67.2k long positions and only 34k shorts from an institutional perspective. So finally, the positioning is shifting again to the positive side. Longs are getting opened, shorts are getting closed from an institutional perspective, and we definitely have the possibility to reject this daily support to the upside. So how we will be approaching this potential longing opportunity with students? Now, as usual, we will be reactive and not predictive. The monthly, weekly, and daily timeframes, those are the best timeframes from a directional perspective. However, when it comes to confirmations and entries, the best timeframes are the 4-hour and the other intraday timeframes. So with students, what we will be doing is monitoring price action from a 4-hour perspective and lower during this move to the downside. And we will be waiting for the market to shift from a 4-hour and lower bearish market as we have right now to a 4-hour and lower bullish market. And as soon as the market will shift from a bearish to a bullish market, at that point, we will be adding silver to our watch list with students. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a very good risk to reward and very good probabilities at that point for the move to the upside and for the market to complete this impulse correction and impulse pattern to the upside, and possibly for the market to provide a higher high. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free education analysis and updates for all of you. You can also go and check out the mentorship program. The link is in the description. It's a very complete program. First, you get all the rules of my rule-based strategies, and then you trade them live with me. Each and every day, I give you a new daily market breakdown showing you how to apply the strategies with the entries, stops, and take profits, as well as answering all your questions every single day, including the weekends. So it's a very complete program. I really suggest that you go and check it out. The link is in the description, and I will see you in it.